market is live right now, and I wanted to go over the first trade of the morning, which was a beautiful move to the downside. But more importantly, I want to show and demonstrate volume and how important volume is, the study of volume, and the edge that it will give you. Volume is a receipt of each transaction. Every order that's processed shows up as volume. When you see a lot of volume come in, that's a lot of transactions. That's the big boys making their moves. So here I wanted to demonstrate a reason why I got out, and I was very careful to not reload to go back short. I saw something in the volume and I want to share it so you can learn how to identify when to get out of a trade, and more importantly, when not to get back into a trade. So the first trade we took was off the break of magenta. It was a beautiful entry that we got right off the break and retest of magenta. We took profits, protected our trade, closed the trade once it left the strong green precision algorithm. Now here's what I want to point out. We see the volume, the bearish volume down here in the red. You see how strong that is. When price touched this level 664, yellow 664, you'll notice this volume bar, this bullish volume bar. Look at how large the volume size is compared to the previous bearish volume bars. It overtook, so there was more transactions in this one single minute than the previous bar. And it's a green volume bar, so it's bullish. The bulls stepped in at this point. When I saw that is when I got out of my short, and within the next minute I posted in the group chat at 6:52, which that was right at that minute. Be careful with more shorts at this time. The bullish volume is large at this support. Took a screenshot of it, and that's what I'm talking about. The volume was larger than the previous bearish volume. If volume is a receipt of each transaction, then you can clearly see that the bulls had a lot of transactions at this 1 minute bar. That shows intention. Now we'll go back to the chart, and I want to show you what happened after that. Good thing we got out of the trade. So that's what we're taught. We're taught to be in the trade in the strongest precision selling algorithm. Once it breaks out of there, close your trade. You've made your money. You want to be in the trade when there's momentum. Once the momentum has died out, close your trade. Wait for the next setup. Now, watch as I forward the charts. Bulls stepped in. If you had stayed in your shorts, you would have got wiped out, lost all the profits you made from that break of magenta. Look at how far back the bulls took the price. They took it all the way back up to the resistance at the teal algorithm. And now you have balance. The chart price action is in balance, and now what we see is a wedge forming. And here's where we're at currently. This is a live chart. You see the wedge. The bulls and the bears are now at equilibrium. So now we wait for the next setup. We wait to see who has more power, money, to move the market either higher or lower. Just a quick video I wanted to share about volume and how important volume analysis is, as well as